Is now a good time to buy in Kelowna? I get asked this question constantly, and I've noticed that most real estate professionals, including some who know better, answer it the same way. Well, it depends on your situation. Yes, every buyer is different. Nobody can time the market specifically, and everybody's got their own unique goals and timelines and motives, etc. However, all of that is technically true, and all of it is an invasion of the actual question. So here's what I'm going to do in this video. I'm going to give you the case for buying now with real data. I'm going to give you the honest case for waiting with real data, and I'm going to show you the actual opportunity cost math here as well. And then I'm going to give you guys a clear framework for making this decision for your specific situation, easy to digest. My name is Jack Bouvier. I'm a local real estate professional here at Vantage Realty in Kelowna. If you have any questions about the market or your specific situation, I'd be happy to have a totally pressure-free, stress-free consultation call. My Calendly link is below. Feel free to book in. We can have a quick chat about your situation. Happy to help out. Again, no pressure. Look forward to chatting with you. Now, let's dive into this video. So here is the data-supported case for acting in 2026 rather than waiting. So data point number one, prices have still remained below the 2022 peak. So Kelowna's single family home benchmark was approximately at $1,018,000, which is below where it was in 2022 market peak in this region. So buying in a market that is below a previous peak and trending toward recovery means that you are buying at a relatively discounted rate to the direction the market is headed. Not a guarantee, but a probabilistic advantage that if you buy now, there's future hopes of your property appreciating in value. Data point number two is the BC Real Estate Association forecasts 4 to 7% annual appreciation for the interior BC market through 2026 to 2027. This is a credible institutional forecast based on the supply, the demand, the rate modeling, and at that rate, a home purchased at $1,018,000 benchmark price today is projected to be worth at $1,060,000 to $1,090,000 in 12 months. So the cost of waiting, if the forecast is accurate, is measured in actual real dollars. Data point number three is the spring markets are very competitive here. The spring buying season, March through April, in Kelowna sees the highest concentration of active buyers in the market calendar. So buyers who enter the market in January and February face lower competition, comparable inventory, and better negotiating positions as well than buyers who wait for the spring peak. So if your timeline allows for it, buying before this peak season is structurally advantageous. Data point number four is this U-Haul growth and population data signal sustained demand, with Kelowna's number 6 ranking on the U-Haul index up from number 23 in 1 year reflects real sustained demand from multiple feeder markets. That demand underlines the price recovery forecast here. The fundamental demand story here is very strong, that there's people still migrating here, still a continued amount of demand. Now here is the honest case for waiting, because I said I'm going to be giving you guys both sides, and I truly mean it. The case for waiting rests on three legitimate. The first concern is the interest rates. If the Bank of Canada continues to moderate rates through 2026, which is the broadly expected trajectory but not guaranteed, buyers who wait 6 to 12 months may qualify for meaningfully lower monthly on the same purchase. So this is a real consideration, particularly for buyers whose purchasing power is rate sensitive. So this 0.5% reduction in your mortgage rate on a $900,000 purchase is approximately $250 to a $300 per month difference. Over a 5-year term, that's $15,000 compared to $18,000. So there is a significant difference there. Second is the life circumstances. If you're selling timeline in your current city, your employment uncertainty or certainty, your family situation is not fully resolved, waiting until those circumstances are clear is the right call, regardless of market timing. So buying under these conditions of personal uncertainty is a risk that this market data cannot mitigate. Reason number three is the segment specific softness. If you're specifically looking at the condo segment where supply from tons of new developments has been a headwind and the recovery trajectory slower than the single family home, there is a credible argument that is waiting for that segment's recovery to further develop that may lead better relative value. So this condo market timeline is very much different than the single family home timeline. So you have to keep that into consideration as well. Those are some of the legitimate arguments for waiting. I do truly want you to understand them because there's pros and cons to both sides. Now let me show you the opportunity cost calculation, because this is the part that most buy versus wait conversations skip. So you're a buyer considering a Kelowna single family home at the benchmark price of approximately $1,018,000. Your alternative is to wait 12 months. If you buy now, $18,000, assuming that the BC Real Estate Association midpoint forecast of 5.5% appreciation, your home is now worth approximately $1,073,990 in 12 months. So that is a gain of $55,990. If you wait these 12 months, you've avoided 12 months of mortgage payments. Let's say you're renting at $2,800 per month instead, meaning that you've spent $33,600 in rent with no equity. So your purchase price in those 12 months is approximately $1,073,990 because the market appreciated while you've waited. Your down payment buys you the same home at a higher price. However, the net cost of this waiting, with the $33,600 in rent paid with no return, plus $55,990 in equity appreciation that you missed, minus whatever you saved or invested during that 12 months, that break-even calculation requires that your savings during the waiting period exceeded approximately $89,000. That's a high bar for most buyers. Important caveat here is this math does assume with the BC Real Estate Association forecast is accurate. Forecasts can be wrong. The market may go down, it may go up more, but markets can obviously surprise us in the direction. This is a probability weighted analysis. It's not a guarantee, but it's just something to consider. But the math, it is worth understanding, because before you do decide that waiting is the conservative option in an appreciating market, waiting does truly have a real price. So keep that in mind. Here's the framework that I use in my relocation strategy calls. The 3 conditions that make Kelowna purchase rational. So condition number 1, your income is stable and portable. Either you're bringing remote income from your current city, or you have a confirmed Kelowna employment arrangement, or you have sufficient equity to service your Kelowna mortgage from your investment income. Stability is the non-negotiable foundation here. Without it, you got no market timing, argument changes, the fundamental risk. Condition 2 is your equity development makes sense at the current prices. You run the numbers honestly. If you're selling in Vancouver, Calgary, Toronto, and you're purchasing in Kelowna, calculate the freed equity, the resulting Kelowna mortgage payment, and also the monthly cost comparison as well to your current situation. If the math produces a material better financial position, and for most equity buyers from those high cost cities, it truly does at the end of the day, then this market timing question is secondary to the structural advantage. Condition number 3 is that you've made this lifestyle decision, not just the financial decision. The buyers who thrive in Kelowna, who call me after a year of their possession and they've said that it's the best decision that they've ever made, are the buyers who truly wanted this Okanagan life, not just the Okanagan math, the lake, the pace, the community. If that's what you're choosing here, then this market timing question just really resolves itself pretty quickly. If you're only here for the financial arbitrage, you're really missing the most important part of the entire picture. All 3 of these conditions are true for you right now. If you buy, the data supports it, and so does the life decision. If one of the 3 options isn't just there yet, then work on that consideration, that condition first, and then revisit the market question. Very meaningful for you. One more distinction I want to draw to you, because the buy versus wait question lands very differently depending on who you are as well. For those equity buyers from Vancouver or Toronto or Calgary, the opportunity cost math that I showed you earlier is, however, if you've deployed capital from a high cost market into a recovering mid-market, the spread between your free to equity and your new mortgage position here is really the financial story. In that context, the case for acting sooner rather than later is supported by both the market data and also this arithmetic. For Kelowna first-time buyers working in the local employment market, I want to give you a more honest answer. This affordability calculus is harder for you since housing costs in Kelowna have been bid up by buyers who are arriving with this outside equity and also outside income. At these current prices, a household earning a Kelowna level income in service, retail, or hospitality does truly face a genuine challenge. Since making the single family home ownership math work, there's government programs such as the First Time Home Savers Account, the First Time Buyer Tax Credit, the BC Transfer Tax Exemption on purchases under $500,000. They all do help. The condo segment at $505,600 is more accessible than the single family home market. But I don't want to pretend that the path to home ownership for local first-time buyers in Kelowna is as clear as it is for these equity migrants. For you, the most important decisions are maximizing your first-time home savers account contributions, being clear-eyed about the condo market as your entry point, and working with an agent who takes your situation very seriously rather than optimistic. So if that sounds like a conversation that you want to have, I do these calls with people just like you every single day, deciding what's their best option, if they're buying here, relocating here, or if they're planning on upsizing or downsizing. I'd be more than happy to have a quick call with you. No pressure, no hassle, no obligation. My Calendly link is in the description below. I'd be happy to have a quick chat with you to kind of dissect your situation a little bit more, give you some honest, truthful advice that may help you, and I would look forward to guiding you throughout this very exciting journey. I really appreciate you watching the end of this video, and if you have any questions and you like this content, feel free to subscribe, hit that like button so you don't miss out on any other future videos, and I'll see you in the next one.